If you want other people to buy into your business, you cannot just rely on your creativity and good faith. You need to be able to take sound strategic decisions about the future by reading and understanding the company's financial reports. And you need to have a clear picture of the financial position as a whole. We're about to see a Dragon's Den pitch where the founder was able to demonstrate her event coordination skills, but she has no idea whether her company is in actual good financial standing. Let's have a look.
Hello, my name is Melanie. I'm known in the industry as Mrs. Christmas. My main business is events. Hopefully today, with your £100,000 investment and 20% return, you'll see that I'm so much more than just Christmas.
All right, so £10,000 for 20% of equity means that the business was valued at £500,000.
Years ago, we always used to visit the big man in the red suit, and occasionally we'd get a cuddly toy or perhaps a photograph as well. So what I decided to do is think, right, what can I do that can stand out from the rest? So then I pioneered Wish for Ticket, which is an online ticketing solution. Rather than waiting in a queue for 2 hours to see Father Christmas, people could book online at their leisure. So then, to make the experience more exciting and bigger, I created Rocket the Reindeer, which is a 12-minute animated 3D film.
So up to now, I still don't quite understand what the business is. So it sounds like instead of queuing up to visit Santa, you can book your time with Santa online, which would cut down the time that you spend in line. And then she talks about like other perks, but I still don't quite understand what she's selling here. Let's see if that gets clarified later.
You come out and there's a whole merchandise there of DVDs and stuff, all sorts of different things. But not only that, in 2010, I turned over roughly about £1 million and my profit was £300,000.
Right. Okay. So now I understand a little bit better. It sounds like she created an experience, a Christmas experience. So people can book online their time with Santa. They get some perks in return. They watch this 12-minute video that she created. There's other characters. So it sounds like she's created an immersive experience for families, which seems to be quite profitable. So if her turnover was £1 million, and remember that turnover is the amount of sales that you generated over a year usually, and her profit was £300,000, her net profit is 30%. That means that of all the sales that she's generated, there's 30% left of it after all the expenses are deducted. And that's the amount that you need to pay corporation tax on. And then you get to distribute whatever is left after you've paid taxes to the shareholders. That is a pretty impressive net profit for this kind of business. There's other business that might be more profitable if you sell, for example, digital products that basically have no costs. Your profit margin will be higher. But because this is an experience, there are many more direct and indirect costs associated with such a thing. And so having 30% of your income left after you've paid all of your expenses is pretty impressive.
This business is very, very seasonal.
So seasonality obviously is something to take into consideration, because obviously these kind of events, you would only be able to run them from maybe late November into Christmas. And so you basically have one good month that you can push them, and then for the rest of the year nobody's going to want to visit Santa. So that's something to consider. But if she managed to generate £1 million over that period of time, that's really impressive. What she didn't mention, or maybe they cut it from the episode, I'm not quite sure, is what will she do with the investment money that she's asking the dragons for? Does she want to expand? Does she want to make more of these events across the UK? Still not quite sure what she's doing with that money.
Tell me about you.
Knowing and liking the founder that you might invest in is really, really important. Not only do they need to already have like successful business ideas and successful businesses that they've been running so far, but they also need to be a person that you trust, that you can rely on, and that you can see yourself working with.
I'm very creative.
Tell me how.
Right. I was asked to put in a Christmas event 3 years ago, and I had to try and increase the footfall into the experience at Christmas. And the figures were 9,000. That's what I had to inherit. In year 2, when I took it over, we increased that to 27,000 people that came through. Last year was 47,000.
Whenever someone is asking you what you bring to the business, bring them facts. So try to use less adjectives like I am great, I am this, I am that. Use actual figures and facts that can actually show how practically you are improving your business year on year. At the beginning, when she was saying, I am creative, I am blah, 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 all these things, the dragon said, how? She wanted some practical evidence of how this woman has led her business to success. She didn't want her to talk about herself in a self-proclamating way. She just wanted the evidence of her business acumen.
And this revenue, the 1 million revenue in the
Yes.
previous 12 months turnover with the 300,000K
Yeah.
profit, is that net or gross profit?
That's gross profit.
So a reminder, the gross turnover is the amount of sales. Then we have our gross profit, which is total amount of sales less cost of sales. Cost of sales is the amount of expenditure that you have incurred to make the product. And then we have the net profit, which is the gross profit less the company's overheads. The overheads are the costs you incur to run the business, such as office rent, insurance, salary costs, and all the other expenses that aren't directly related to making the product.
You've got GP of 300,000 in
Yes.
2000.
GP is gross profit.
Yes.
So what does that produce in terms of net profit?
At the moment, there isn't really too much left in the pot for profit because I've reinvested everything I've got. I've bought costume characters and I've bought my films. So I'm at a position now where I've got assets and I'm almost asset rich, but cash for cash.
Okay, let's talk about that then. Your balance.
Aha. So the business is profitable, but it is cash poor, which means that the amount that is left from running the business, so everything that is left after you deduct all the costs from your sales, she bought assets with that money. So it is profitable. There is something left after you incur all the costs. But then if you use that money to buy assets, your cash balance reduces.
Okay, let's talk about that then. Your balance sheet. So what does that look like?
The balance sheet is a report that shows everything that the company owns, which are the assets, and everything that the company owes, which are the liabilities. And the difference between the two is called reserves.
My gross profit was 500,000.
Yeah, that's profit and loss though.
Yes.
So I'm looking, so you talked about assets.
Yes.
So I'm sitting in the balance sheet
Yeah.
now. What are your fixed assets?
Deborah asked about the balance sheet, which is a specific report that shows at a specific date the asset, the liabilities, and the reserves. And the lady responded with what's on the profit and loss report, which is a completely separate report. The profit and loss report shows the income that was generated and the expenses that were incurred over a period of time, which is usually the financial year, whereas the balance sheet shows at a specific date what the assets and the liabilities are. The assets are divided into fixed assets, and those are the non-liquid assets. So for example, if your company owns a company car, that will be considered a fixed asset because it's not liquid, it's not cash that you can exchange for other things. Computers and other like costly IT equipment are normally classified as fixed assets. And also, you know, if your company owns a property or bought an office, that would also classify as a fixed asset. So they are things of value that the company owns that can't be easily converted into cash. If your company owns an office, for example, you cannot rip out a brick from that office and use it in exchange for services. You would have to sell the entire office in order to get cash from it. So those are the fixed assets. And then you have your current assets, which are the things that are liquid, so cash, that cash that you have in the bank, or they are things that will be liquid in a very short amount of time. For example, any sales invoices that you have raised that you're waiting payment against, that will be considered a current assets because you would expect it to be paid to you in a very short amount. So Deborah has just asked about the company fixed assets. So I'm expecting to hear about equipment and all the things that the business owner has bought in order for her to expand and grow her business. Let's see.
About £200,000.
Okay, so what's the number at the bottom, your net assets for the company?
Net assets is the difference between the assets and the liabilities. So what's left of your assets if you deduct all the money that you owe other people?
At the moment, it's £40,000.
40,000.
That's what my profit will be for 2012.
Not profit.
That's net.
No, you're talking profit.
Okay.
So balance sheet. What's your net worth?
£200,000. That's my assets.
Right. So she's getting a little bit confused. And the balance sheet is usually the report that is the most abstract to gather. I think everybody has seen a profit and loss report before, even if you don't own a business. But if you have even created a budget for yourself, like a personal budget, you will have your salary coming in or your income coming in, and then you will have all of your expenses, rent and utilities, etc. And what's left are your savings. So that's the equivalent of a company's profit and loss report, where you have the money coming in and the money going out and what's left out of it. The balance sheet is different. The balance sheet takes everything that the company owns that has value, and it shows also everything that the company owns to other people, so the liabilities, and the difference between the two shows the book value of the company.
Do you have any stock?
Yes.
What's the value of that stock?
So the stock would be considered another asset. So the stock is essentially the inventory that you're keeping in a store that is waiting to be sold.
£50,000.
Cost price?
Yes. That's
Cost price. There's many ways that you can value the stock, the inventory that you have. And cost price means that you're valuing that inventory by how much it cost you to purchase it, rather than how much you're going to sell it to your customer.
Do you owe anybody any money at the moment?
Liabilities.
about £20,000.
And does anybody owe you any money?
About 57,000.
The technical term for that is the debtors. So for example, are there any sales invoices that you're waiting to get paid from your customers? So what Peter is doing is just breaking down the definitions. Deborah was asking, what are the assets and what are the net assets, which might be a bit technical language for someone who's not used to necessarily looking at management accounts very often. And Peter is breaking it down into, okay, so how much stock do you have? How much inventory do you have? How much money do you owe the other people? And how much money do other people owe you? So he's breaking the balance sheet down into the various items that make it up.
Do you have any cash in your bank at the moment?
About 20-something thousand, I think.
So that is another current asset.
Do you have any loans?
About £45,000.
That's another liability. So if you have received a loan from a bank, the money coming in obviously wouldn't be income because you haven't earned it as a result of sales. The money coming in from a loan is a liability, and then you repaying that loan out would reduce the balance of that loan liability.
So in general, I've come out of a net asset value of your company 62,000.
So the 62,000 is the difference between all of her assets, so the inventory, the cash that she has in the bank account, and the money that other people owe her. And then he deducted the liabilities, which were the loans and the money that she owes other people.
My head is smashed now with numbers. I'm going to say to you, it is smashed.
Yeah. So the financial position of your company is usually mapped out across three main reports that you need to be very comfortable with. The first one is the profit and loss report, which is what most business owners know instinctively. So how much sales and how much expenses. The bottom line is the profit. And then you have the balance sheet, which gives you the book value of your company. So what you have less what you owe other people, that's the book value of the company. And then you also have the cash flow. So you should have a good idea of how much cash is coming in and out over the next 12 months and whether that's enough for you to sustain your normal operations. And so those are all figures that you should expect to be asked about when you enter the Dragon's Den.
I don't remember numbers. Honestly, I don't remember numbers.
Okay, so she's getting defensive, which is the wrong thing to do. It's not the dragon's problem that you can't remember numbers. You could have brought something with you, or you could have just prepared a little bit better. If that's not your strength, then either you prepare better or you bring with you the tools that will help you make the pitch in a way that is more compelling. But you can't get defensive in these situations. It's on you if you can't reply to very basic financial questions from an investor that you're expecting to give you their hard-earned money.
I'll make you loads of money.
Melanie,
I know.
if you're making loads of money, what are you doing
I'm not
here?
yet. No,
Oh,
but I have a creative head, and it just needs somebody like you to grab hold of
But
me and say, you know what,
Melanie.
I'll do your financing.
Melanie.
You go make the
Melanie.
money.
You can't expect that from an investor, especially of this caliber. You cannot expect someone to baby you and to do the finances for you. That's something that you should take care of. That's something that you should hire someone for if that's not your strength. And what the dragons can do is just give you some like mentorship and maybe some contacts and maybe like pick up the phone and put you in touch with other people. But you can't expect an investor to come in and be part of the day-to-day running of the business. That's not how it works. Usually with venture capital and angel investment, there is definitely an expectation that the investor would give some of their time to help you grow, but you can't expect them to like hone you in and like teach you the trade and teach you the mechanics of the business. It doesn't really work like that, and that's not something that you should expect.
I can't even understand your business. They might invest in you.
Right.
Yeah, exactly. So what I was telling you before, I don't quite understand where the money's coming from. Is it just ticket income and maybe merch sales? Like, how is it making money? Where's the money coming from?
You've got Melbury Events, which is a ground operation. So I have hundreds of costumes and staffing, the best in the country. And what I did is I created Wish for Ticket as an add-on, and then I made a film. I came up with Rocket. I wanted a 3D experience.
It's still not clear. She's giving us the names of the companies, but we don't know what the model is. So the business model should depict where the income is coming from and how the business is essentially put together to generate the income that then will trickle down to profit. I assume that what she's offering again is like an experience, like a live experience of Christmas, but I'm not quite sure exactly what she's selling.
And how many did you sell?
Last year, it was seen by about 600,000 people across the country.
Sorry, Melanie.
So what does it mean that it was seen by? Does she project it somewhere, and do people pay tickets to see the projection of the movie, or do they buy the DVDs, or both? What is it that she's doing? By the way, if you're enjoying this episode, please give it a like and subscribe and maybe leave a comment. It fills me with joy whenever that happens, and it would really mean the world to me.
Hillary asked you a question and you come up with a completely different answer.
Did I?
Yep. She says, how many did you sell? And you said last year it was seen by 600,000 people.
Right.
How many did you sell?
Couple hundred on that last year because it came out a week before Christmas.
That doesn't matter.
Okay, it was just a thought of mine to do.
You sold
afterwards.
200.
We just teased that.
You sold 200 at what price?
At £6.
What did it cost you to make the film?
70,000, 80,000 pounds. But I sold the license as well.
How much for?
For £6,000. 6 times I sold it.
So 36,000 you sold the
Yes.
license for, and you sold 1,200 pounds worth of DVDs. It cost you 80,000 pounds to make the film.
Yes.
And you sold the film for 37,000 pounds,
Yeah.
making a loss of 42,500 pounds.
So if you really dig into the numbers, you can see that the DVDs are not even profitable. So it's always better to come forth with this kind of information. You see that she was trying to cover it up by saying that it was seen however many times by however many people, but that's not what's interesting to people who are looking to get profits from your business. You have to dig into the numbers, and if there's an operation that is not profitable yet, that's fine, and that may be the reason why you're calling in investment, because you need to grow and expand it in order for it to be at a scale that it will generate profits. But you have to be forthright with that kind of information. You cannot try to cover it up, because people like these will look right through you.
I am out.
Great to be creative, but you've invested money in these other areas, but they haven't paid off.
No, I'm so sorry. No.
Why no?
Because of the gate figures. You're looking.
No, gates are relevant because they'd still do the gate without watching that movie.
Peter, I've now got these assets.
They're not. They're not.
But they're paid for.
They're not assets. They're ideas to generate additional income, and you've just proved that by introducing them at the cost that you have, that they don't generate any income. You clearly are very entrepreneurial. You've got a real passion for events, and you clearly are very good at it. But I think a reality check needs to happen.
This is the point that Peter is making. He's saying you are amazing at making things happen. Clearly, you are great at like building the systems and creating experiences that clearly people are enjoying, but you're not making financially sound decisions. So she invested tens of thousands of pounds in this movie, in this film, and it hasn't made a profit yet. It's not clear to me if she knew even if the business idea was loss making. It sounds like that data was like pulled out of her mouth with force. And so I can see why the dragons would be reluctant to invest in her.
I'm going to say I'm out.
What is absolutely clear is you make little or no money.
If her figures of her profit and loss were correct, she made £300,000 in profit, which is good. It's not bad. But if she's not able to demonstrate that she can make appropriate business decisions to multiply that profit going forward, nobody's going to want to invest in her. She herself said that her business is profitable but cash poor, which means that whatever is left of the business's profit is invested in things that are not generating any money.
You need to stop, reconsider, and have a new battle plan.
What I would recommend this founder is to get a business development manager or director that can really help her make strategic decisions about her business. Not only it looks like she spent a lot of money into something that isn't generating a lot of income at all, she also has a loan to repay the bank because that's how she financed that project. And so she needs to be really, really careful in how she employs her financial resources so that she can generate more income, keep the costs low, and have enough profit so that she can repay her liabilities and also have enough money left to pay herself.
I'm out.
Melanie, the trouble is, I have no idea whether you have got a fantastic business or a business that is about to fall over.
Yeah, me too. I don't know whether the business is just about to explode because she has set it up in a way that is successful, or whether she thinks it's successful, but she's looking at the numbers in a skewed way.
I
That's fine.
can't invest.
No, and I wouldn't invest. The way I feel. But it's so frustrating because you
just feel like if I ask you a question, I'm not going to be able to believe the answer.
Okay.
Yeah, so she hasn't shown that she's reliable enough on the financial management side of things for an investment. And for me, she's maybe a little bit too defensive.
You don't know your numbers, but that's not a crime.
Yeah. It's not my strength.
It's not her strength, but it is her responsibility. Just because you didn't necessarily receive any training on financial management doesn't mean that you shouldn't take the responsibility to own up to it. And again, you don't need to be an absolute expert in it, and you don't need to be the person doing the bookkeeping, and you don't need to be the person even assembling the numbers together. You can outsource that to an accountant, but you do then need to be able to read those numbers and then make strategic decisions based on those numbers that can help your business grow, rather than just it being good vibes.
Write a 3-year business plan.
So writing a business plan can be a good exercise because it makes you look into the future. So a business plan usually includes financial projections between now and 3 to 5 years in the future. And it makes you reflect on what strategic decisions you need to take to move the levers in a way that allow your business to grow. And writing a business plan can be, it doesn't have to be, but it usually is a bit of a boring exercise, but it forces you to think. It forces you to really be strategic about the direction that you're going and the kind of decisions that you're making and the kind of offers that you're putting out there and the pricing strategies that you're going for and the kind of industry collaborations and partnerships that you want to set up. Like, it gives you like a bird's eye holistic view of how to manage your business rather than just thinking about like the current year and what's going on now.
I won't be investing in you today, so I'm out.
I know what she should put on her Santa list. An accountant.
Right. So I do believe that one of the first things that you should outsource whenever you're generating enough money to afford it is to outsource your bookkeeping and your accounts. For my own business, I do them myself, but I am a finance director, so I actually enjoy that side of things. I have management account meetings with myself because I know what I'm doing. But if you don't, and you're like this lady and you're more keen on the creative and practical side of the business, I would really recommend outsourcing your financial financial work to an accountant, but then the idea is to meet with that accountant regularly. I would suggest every month or at least every quarter, and having their expert view on how the business is running and how profitable it is, and what the cash flow is looking like, and what strategic things you can do to make the business grow. So let's see what this founder did well and what she could have done better. What I think came across really well is her passion and enthusiasm for the business. And also, I think she really demonstrated her skills making things happen. And you absolutely do need this in business. If you want to be a successful business owner, you have to get out there and just get things done and make things happen, rather than just like getting looped into this like planning and reforecasting and thinking and planning and thinking and, you know, journaling and all that kind of stuff. And then you actually never put yourself out there. Putting yourself out there and starting to learn by doing is one of the key things that actually hold a lot of people back when they're thinking about becoming self-employed. So clearly, this lady is capable in many, many things, but what she could do better is just come more prepared on the financial side of business. If you're looking for investors or partners or, you know, any sort of like business deal that could be good for you, you do need to be confident about talking about your company's numbers, and you do need a clear picture of the financial position of your organization. And this founder wasn't very prepared on that front. If you like this video, make sure that you check out all my other Dragon's Den reactions, and I'll see you at the next one.